Andrew Bomford reporting. We're joined now by Nicola Horlick, formerly an investment banker in the city. She's now launching what's described as a lending platform called Money&Co. Good afternoon.
Good afternoon.
Sounds a little bit scary, that idea that in some areas you are more likely than not to lose 100% of your investment.
Well, the way we're going to operate is more like a bank in the sense that we have credit analysts who will be analysing the companies very, very thoroughly. And so we will only have what we call credit-worthy companies on our site. And I think that's really important because, as was said in that report, the individual does have to make decisions, although there is an option on our site to actually do something called auto-lend and just say, I want to lend this amount of money and I want to spread it as widely as possible. And then that happens automatically. But the key thing, in my view, is that you've got to have investment-grade debt available. I don't want to be associated with something where people are highly likely to lose their money.
And you really will check the companies thoroughly, would you? Because I read, this may well be wrong, you'll correct me if it is, that if you are investing less than £500,000, you could just do that on the website without anybody visiting a factory or talking to a company manager.
No, we have a team of credit analysts who've come from a major bank and they've built a credit analysis system. So a lot of it will be automated, but in order to borrow on our site, companies will have to have 3 years of filed accounts, and that will be checked with Companies House to make sure they're telling us the right information. And so they have to be established businesses, they need to be profitable. But I think from a company's point of view, because it's not just about the lenders, it's also about the borrowers, it gives them access to capital. It's less onerous than dealing with a bank. Our banking agreements will be about 4 pages long as opposed to 100 pages long. And people won't have to, give hundreds of personal guarantees and so on and so forth. It's going to be a much easier process. And we'll actually approve loans within 72 hours. It takes an awful lot longer with a bank.
But from the borrower's point of view, that man in Andrew Bomford's report was paying 12%. Pretty hefty interest, that.
Well, this is where the lenders do decide. So we will do the work. We'll say this is a credit-worthy company. We'll give guidance in terms of what we think the interest rate should be. But as the girl from the FT said, it's actually up to the lenders to decide the rate. So it is a bit like eBay. You go on and actually, we will be auctioning the loans in effect, and people will bid. So it's up to the individuals to decide what they think should be paid in terms of interest. 12 sounds very high to me. Oh. I would expect our average rate to be nearer to 8 on our site because these are relatively credit-worthy companies, as I said.
And how long do you think it will be, if it ever happens indeed, before businesses like yours really challenge the big banks in a serious way? When we reach a point that the banks have to adjust the way they operate to take account of the competition?
Well, I think we're actually at a tipping point now, because we can see that the banks are taking a step back from this area and not lending very much money to small and medium-sized companies. And that's a conscious decision, I think. It's very difficult for the banks. I mean, everybody wants to criticise them, but they're being asked to strengthen their balance sheets. There's all sorts of regulation that is forcing them to do that. But at the same time, the government's saying lend more to small and medium-sized companies, which are relatively risky compared to large international companies. So there's a bit of a dichotomy there, and that leaves the opportunity open for people like us to come in and fill that gap.
Nicola Horlick, thank you very much indeed for joining us.